Well, good morning and welcome. You're watching Market Cafe on ET Now. I am Harsh Saita and with me is Ankita Saxena. This is that show that we take you through all that's happening in global markets, Ankita, and where we take you through all the stock-specific news that have happened post-market yesterday and what reactions could we expect today as well. So stay tuned, it's a power-pack lineup for us ahead. But we'll start off with global markets where they're placed at. Of course, the US banking crisis saw markets slightly timid, if I may use the word very lightly, Ankita. But how are markets on Monday? How have they opened the new week?
Right, so the markets have been timid as you mentioned, but yesterday we did see a bit of a relief rally coming in there. US stocks jumped yesterday after a deal to rescue Credit Suisse and the central bank's effort to bolster confidence in the financial system relieved the investors, while the participants also weighed the likelihood of a pause in the interest rates from the Federal Reserve this week. Now, Dow Jones was up 392 points, S&P 500 was up 0.8%, and the Nasdaq Composite was up 0.3%. Now, if you look at the European markets, the European stocks closed higher again, taking a cue from the US markets as investors digested the news of the UBS takeover of Credit Suisse in a deal that was worth $3.2 billion, giving a bit of a relief for the investors that the bank has been rescued. Now, the Pan-European Stock 600 index was lower in the first hours of trade before moving into the positive territory and closed 1% higher with all the sectors in the green. DAX was up 1%, FTSE was up 0.9%, and CSE was up 1.2% in trade yesterday, Harsh. Tell us, how is the crude faring? We did see a big fall coming in the crude, but where is the crude at currently?
Yeah, a bit of a withdrawal in crude. We did see that yesterday as well as, at the end of last week. We saw Brent at $73.50 a barrel. Not seen those levels since quite some time now. So definitely some of that negativity or the negative sentiment flowing over crude as well. Now, on the other side of things though, we are seeing a resolution of sorts that's happening in the banking and the financial services segment with Credit Suisse taken over by UBS. And maybe that's also aiding crude prices. But at the moment, crude is absolutely flat versus yesterday. It had fallen further yesterday after that takeover of Credit Suisse. But it's recovered back and it's where it was yesterday. At least at the moment, we're seeing Brent crude at $73.50 a barrel. And we're seeing WTI at $67 a barrel. Of course, most analysts expecting a rebound in crude as things unwind and as things start getting better. So keep your eye out. Crude is a moving piece, just like the markets, at least at the moment.
All right, Harsh, we will keep an eye out on crude as well. But for now, let's quickly take a look at what are the events that we need to watch out for today. Of course, we have the big FOMC policy meets that will begin today. We will be keeping an eye out on that, tracking that very closely. Also, we have HZL that will be having its board meeting to consider an interim dividend for FY23. We have Himmat Singhka CD who will be having the board meet on the issue of the FCC deals, and we have Natco Pharma that will open the buyback issue today. So these are the events that we will be tracking very closely, Harsh. What are the other headlines that made the news yesterday?
Well, yes, let's quickly shift over to Europe. ECB President Christine Lagarde has said in European Parliament that market tensions are adding uncertainty to forecasts. Lagarde also added that the ECB is ready to act as needed to restore financial stability.
The swift action and the decisions taken by the Swiss authorities. These actions are instrumental for restoring orderly market conditions and ensuring financial stability. Let me also remind that we are monitoring market developments closely and stand ready to respond as necessary to preserve price stability and financial stability in the euro area. The euro area banking sector is resilient with strong capital and liquidity positions. In any event, the ECB's policy toolkit is fully equipped to provide liquidity support to the euro area financial system, if needed. and to preserve the smooth transmission of monetary policy.
Right, and the global ratings agency S&P has gone ahead and revised its outlook for UBS to negative, saying it expects the integration of large parts of the Credit Suisse investment banking activities to carry material risk. The rating agency affirmed UBS's A issuer credit rating. The move comes after UBS agreed to take over Credit Suisse on Sunday in a move brokered by the Swiss government and central bank.
Well, and Riyadh-based Saudi National Bank was hit or has hit a loss of almost 80% on its Credit Suisse investment. The lender has around 10% in Credit Suisse after an investment of $1.5 billion, making it the largest shareholder in the Swiss lender.
And global e-commerce giant Amazon announces another fresh rounds of layoffs, which will result in 9,000 job cuts across departments. In a memo to employees, CEO Andy Jassy stated that while it was a difficult decision, it was necessary for the long-term success of the company. The decision comes just 2 months after the company had announced it was laying off 18,000 employees.
Well, and shifting focus to Asia, crisis-stricken Sri Lanka has secured a $2.9 billion bailout from the International Monetary Fund. The said bailout raises hopes for an easing of the island nation's dire economic crisis. The approval clears the way for the release of funds and kicks off a 4-year program designed to shore up the South Asian nation's economy.
And staying with more global news flow, all eyes are on Chinese President Xi Jinping's state visit to Russia. As per media reports, Xi and his Russian counterpart Vladimir Putin praised their country's alliance, which has grown over the last decade. What's also on the agenda is Jinping's 12-point plan to settle the Ukraine crisis that awaits a decision to be had by both.
And in other important updates, we saw TikTok has now a whopping 150 million active users in the United States. That figure is up from 100 million in 2020. Solid growth. Do remember, the app continues to face growing pressure around a potential ban in the States.
And well, another bank that has been in the news has been the SVB, or the Silicon Valley Bank, alongside Credit Suisse. So why is there a global system that's going through a tough time? Here's an explainer of that. Let's take a look.
UBS is Switzerland's largest bank, and now it's all set to buy this crisis-hit Credit Suisse group. It's going to be a historic deal. It's a government-brokered deal. The Swiss government, to be precise, they're brokering this deal. And now they're seeking to address this unprecedented rout that we've seen in the stock of Credit Suisse and its bonds as well, all of which happened over the past week. The crisis at Switzerland's second-largest bank encapsulates the kind of turmoil that we're seeing in the global banking industry, which has been hit by the series of bank collapses. So really, it begs the question, what's really ailing the banks? Let's answer that from the very basics. You see, any financial system runs on trust. And when that trust is shaken, it leads to a classic bank run. What is a bank run? A bank run usually means a situation where all the depositors want to withdraw their money all at the same time. But banks don't sit with all the money of depositors. Instead, they lend that money. They invest the remaining amount to earn some profits. Now, it all started with the US's Silicon Valley Bank, SVB, which collapsed after a classic bank run in which SVB's depositors demanded close to $42 billion in one go. Now, SVB had seen this phenomenal surge in deposits all the way from $60 billion in the year 2020. It went up to more than $200 billion, all thanks to the tech and startup boom in the wake of the COVID-19 pandemic. But SVB put almost all its deposits in long-term US government bonds. And when SVB sold these long-term bonds prematurely to meet the sudden demand from depositors, it booked heavy losses. Something similar unfolded at Signature Bank after depositors demanded 20% of all its deposits. And soon, big US banks had to rush in to save First Republic Bank as well. The bank runs reflect a crisis of confidence, one that is only increasing with each bank's collapse. And now policymakers across the world, they are worried about the spread of this contagion. Central banks across the world, they are caught in a dilemma. While their primary mandate is to bring down inflation and restore price stability in the economy, they are finding that their sharp monetary tightening is actually increasing, catching banks and financial players off guard. So before the collapse of the Silicon Valley Bank, most analysts were expecting another 50 basis point hike from the Fed. But the turmoil in the global banking industry now has the Fed doing a bit of a rethink. Many are expecting the Fed to either pause rate hikes or to slow down the hike to 25 basis points this time. All eyes, of course, are now on the US Fed and its action that takes place this week. It will signal whether the Fed will prioritize financial stability or choose to continue the size and the pace that they've set on interest rate hikes.
Always interesting having those explainers from Vikram, right, Ankita?
Absolutely, Harsh.
But with that, we'll slip into a very short break. More on the other side. We'll go domestic. Welcome back. You're watching Market Cafe on ET Now. We'll quickly move ahead on the domestic front. New vehicle purchases may begin to cost more as the auto industry gears up to implement the real driving emission or RDE norms. Srishti is here with more details on how major car makers are gearing up for this change.
Okay, so as we know that the BS6 transmission in India was done back in 2020, but the second phase of the implementation, that is the real driving emission norms, that will kick in this April 1st, 2023, almost 10 days from now, and that is going to have a likely impact on the customers as the prices of the vehicles segment-wise are expected to increase. Just to give you a perspective, this particular norm ensures that the car deliver low emission in the real driving condition, and for that the vehicles are mandated to fit a diagnostic kit into their device, and that of course is going to cost you. What these manufacturers have done is that they have already tried to partially pass on the price hikes to all their customers, but going ahead there are more price hikes likely. So let's shift focus to what the segment wise expectation is. Firstly, let's talk about the bifurcation of the engine types. Interestingly, a point to note is that the diesel variant is expected to get impacted more in comparison to the other gasoline segments. The ideal cost impact of RDE is 15 to 20,000 for a gasoline car. I'm talking about the car segment, but for the diesel car, the impact is expected to be 65,000 to 75,000. Coming to the whole passenger vehicle segment, a price hikes of around 2 to 4% is expected. In commercial vehicle segment, a similar price hike is what we are expecting, and for the two-wheeler segment, the entry level is expected to see a price hike of approximately 2,500. So that is the segment-wise expectation. Almost 10 days from now, these emission norms will kick in, and then we can see all these companies coming up with their price hike announcement. But for now, Tata Motors says that they have already upgraded their PV segment ahead of the timeline, and they have also partially passed on the price hikes. For M&M, they are ready for next 10 days, and they will be ready with all norms and all set of conditions to be agreed with. They will increase the prices is what they are indicating, and for Maruti Suzuki, the price hike will depend model wise, and in times ahead we're going to be seeing and watching that. But for 10 days from now, automobile industry is almost ready to get these norms in place. Back to you.
All right, thank you, Srishti, for those details. We'll move on now. India's finance ministry has released economic review report for February. The report highlights that there are concerns regarding corporate debt vulnerabilities as central banks tighten financial conditions. But what does the report say on India's macro? My colleague Prakash Priyadarshi filed this report earlier. Let's take a look.
In a monthly economic review report released by the Finance Ministry for the month of February has said, despite external headwinds, Indian economy is expected to grow at 7% in the financial year 2023. The growth momentum we have seen in third quarter of the current financial year is likely to continue in the last quarter of the current financial year. Ministry has mentioned a series of factors which is showing resilience of the Indian economy and providing, evidence with the fact that Indian economy is strengthening and may grow further. When it comes to inflation. As per the report, WI inflation has reduced to 25-month low, and its effect may be transmitted to CPI inflation very soon. As per the Finance Ministry report, it has taken into account various forecasts that has been made by the international agencies, which shows that the inflation will moderate further in the financial year 2024, and inflation in India is likely to be in a range of 5 to 6%, with risk evenly balanced. When it comes to India's current account deficit, as per the report, India's current account deficit is estimated to fall in the financial year 23 and 24, providing a buffer to the rupee in certain times. That will also provide much needed relief to the external sectors, especially taking into consideration that there is a possibility that the Fed may increase interest rate further. When it comes to tightening of financial condition, as per the report, tightening of financial condition by central banks to tame inflation may raise some concern. It may speed up, corporate debt vulnerabilities going forward, with corporates being already highly leveraged. But in case of India, the concern seems to be limited.
Well, thanks for that, Prakash. We'll quickly move on. Zwigato hit the cinemas last week. The movie stars comedian Kapil Sharma following the story of a delivery boy battling with the world of ratings and incentives. The movie has gotten positive response from the audience. So my colleague Tamanna Inamdar spoke with the director of the movie. Listen into that excerpt.
Not just reviews, I've been getting so many messages, both directly and through social media, and it's not just been that I like the film. It's really been a lot of sharing, lot of deep diving into their own world, their prejudices, and people are bearing themselves. I mean, I think it is somewhere pricking the conscience, and that's what the aim of the film was, to show us a mirror that we all are so absorbed in our lives, and we forget to even notice so many people who are just invisible around us.
Yeah. Tell us about the theme. It's a very different kind of a theme for an Indian movie, for a Hindi movie, which has a theatrical release. You've featured the life of a delivery food guy. How did you come upon the theme and this idea for the story?
Well, it was born during COVID times. We were all sort of at home. We were saying stay home, stay safe, and yet we knew that so many people were neither safe nor did they have homes. And in that time where there was a lot of anxiety around, growing joblessness, and people were doing all kinds of menial works just to sort of make ends meet, gig economy seemed like a savior. But it was a new form of employment. I mean, each person was just in with themselves and that gadget that they had, and it wasn't a traditional setup where you have co-workers, you have a boss, so it was a new form, and these young riders were grappling with the world of ratings and incentives and algorithms. So the world was changing, even in cities, urban cities of India. And I was always curious, what is their life like? How do they even deal with, considering I'm so bad with math? And I was like, their rules must be changing. How do they know where to go? What if the address is wrong? So it began more out of just curiosity and some amount of empathy. And then when I started talking to the riders, I interviewed many of these riders, and we started feeling that there's definitely a story in there that needs to be told. And it's not just the food rider's story. It's also about his family. How does it impact the family? It's also about that world. Everything that modern India has thrown up, right? With all the modernity, we are still grappling with so many disparities of gender, of class, of caste, of religion. So I realized that even if you're telling a 4-day story, there is a lot that you can shed light on. And I think that has been, for me as well, an interesting sort of revelation that if you're making a modern times, like how Chaplin did Man and Machine, we are trying to grapple, we're trying to tell a story of man and algorithms, but we're also telling a story of our time.
Well, that looks like an interesting movie, Harsh. Any plans for the movie?
Not yet, but yeah, I might. I mean, It's got the Zwigato. The name is pretty
very
unique.
interesting.
You know, Zomato and
Zomato
Swiggy.
and Zwigato, yeah.
Yeah, so that's pretty unique. So that's kind of got my attention.
Absolutely. And with that, it's time for us to slip into a short break. You don't go anywhere. There's lots more stock-specific action on the other side.
Welcome back. You're watching Market Cafe on ET Now. Let's quickly take you through what Asian markets are up to in line with their global peers. Largely, Asian markets are in the green except the Nikkei, which is down around 1.5%, in early trade. But let's look at the ASX 200, which is up over 1% in trade. The Kospi also up around 0.5% as we speak. We're looking at gains on the Hang Seng as well, over 0.5% higher. And we're seeing the Shanghai up around 0.5% as well. So across the board, we're seeing green at the moment. Where the dollar index is concerned, dollar index also making gains. So all of those losses, all of that negativity being bought into now is what the sense is. Let's look at gold though. All eyes on gold, very close to that $2,000 an ounce mark. That's where gold currently sits at. We're looking at bond yields. The US 10-year bond yield just below the 3.5% mark. So keep our eyes out on all of those moving parts because we have the FOMC as well. Before the end of this week, we'll know how much the FOMC is hiking by and more importantly, what the commentary forward looks like.
Yes, and that is something we will be keeping an eye out for, tracking very closely. And for now, positive start coming in for the Indian markets, taking a cue from the global markets. Now let's quickly move on to more stock-specific action. My colleague Vamakshi is joining us with all the stocks that you need to watch out for in today's trading session. Over to you, Vamakshi.
Well, absolutely. Let's first start off with SIAT. The company has in fact announced that they've gone ahead, appointed Adnab Banerjee as the MD and CEO for 2 years. In fact, he has 30 years experience in SIAT, Marico as well as Bojo Paints. Now, this has come in after Anant Goenka has resigned from the post and he has now been reappointed as the Vice Chairman. Sterling and Wilson Renewable Energy is the next one on our radar. The company has bagged a 2,100 crore NTPC project. This is a solar power project of 1.5 gigawatts capacity and it has 3 years of operation and maintenance. With this, the order book is expected to rise nearly 66% to 4,500 crores. PVR is the next one on our radar. Warburg Pincus has sold 2.49% stake in the company worth nearly 380 crores and it has in fact exited its whole stake. Now the buyers include ICICI Prudential, SBI MF as well as Societe Generale. Indian Oil is the next company that we will be talking about. This company is in focus as it is expected to form a JV with NTPC Green Energy to set up renewable energy power plants. Lupin in focus as its alliance partner Kaplan Steriles has received the US FDA nod for its ANDA for anesthesia injections. Dr. Reddy is in focus after it has inked an agreement with Koya Therapeutics for neurodegenerative diseases treatment. PNC Infrastech is in focus on the back of an order win. The company has received a rupees 771 crore order worth from Haryana Rail Infrastructure Development and on the back of that you should watch out for this stock as well. Uno Minda will also be in focus as it is expected to consolidate its four-wheeler alloy business by acquiring Kosai's stake in joint venture entities in India. And lastly, we will be watching out for J&K Bank. Their company has signed a corporate agency agreement with Bajaj Allianz Life Insurance Company for servicing as well as soliciting their life insurance products through their branch network.
Much for that, Vamakshi. We'll quickly move on, put into focus some of the key management meets and highlights. And we have two companies, Shree Cement as well as Oberoi Realty. My colleague Vinny is here with more details on both of those.
Absolutely. You know, let's just talk about Shree Cement first because in the note that MK has come out with about the management meet, what they're highlighting is that now the targets are narrowing in terms of the pricing gap with the peers. The company is furthermore intending to focus on building brands to narrow down the pricing gap even more to rupees 20 to 25 per bag with the peers. So yes, they are going to be focusing furthermore on building brands, narrowing that pricing gap that they're seeing as well. Other than that, the company is going to be focusing more on cost optimization for maintaining the leadership position, as well as they're aiming a volume growth of around 1.2 times to 1.3 times the industry's rate that we're seeing over the next few years. So good growth is what they are expecting to see in terms of volumes over the next few years as well. Management expects the demand to report around 6 to 8% CAGR growth as well. That's the highlight coming in from Shree Cement. Let's move on and talk about overall Realty. Now, they met with Motilal Oswal. What they're saying is, one, they're expecting to receive the OC for their Commerce 3 Goregaon structure, the infrastructure business over there and the plant over there in terms of by the end of FY24. Other than that, they're saying that Morgan Stanley has actually commenced fit outs and likely to start paying rentals beginning of FY25. Borivali Mall also is on track to commence operations between October to November 2023. Inox has already come on board for one of their anchor tenants for the Borivali Mall as well. So that's a factor to watch out for. They're seeing good traction in terms of Borivali Mall. Tenants are coming into place over there, and the mall is likely to stabilize by FY25 and can generate annual rentals of rupees 250 crores as well. Annuity rentals are projected to surge by around 1,200 crores by FY26 from just 300 crores in FY23. So surely positive commentary coming in there as well.
All right, thank you for the details, Winnie. We'll move on to Vamakshi yet again because she has all the brokerage notes that are coming in this morning. Vamakshi, take us through what the brokerages are saying today.
Absolutely. Let's first start off with LTTS. We have a note that has come in from Citi. Now they've opened a 90-day negative catalyst watch on LTTS. They see that there are risks to FY24 revenue growth guidance expectations. LTTS in fact has already indicated that they're tightening budgets, as well as they've also indicated for caution in certain segments, and as far as the valuations are concerned, they're still expensive. So on the back of that, Citi has maintained a sell rating, target price of 2,960 per share. The next stock on our radar is Reliance Industries. CLSA believes that the stock is now just 5% above the conservative valuation. They expect to see some uptick in the near-term profits of the energy business, ramp up of its FMCG business, as well as the launch of air fiber are some important factors that they are watching out for. So given all those reasons, CLSA has a buy rating on Reliance Industries. They've got a target price of 2,970 per share. And lastly, we will be watching out for ICICI Bank. Bank of America believes that the structural re-rating story for the bank has more legs. The best, in fact, for ICICI Bank is yet to come. Tactical plus structural opportunity is leading to an attractive risk reward for ICICI Bank. And on the back of that, Bank of America has maintained a buy rating on the stock, given a target price of 1,100 per share.
Thanks so much for that, Vamakshi. But we'll switch focus. The center on Monday reduced the tax on windfall gains on domestic production of crude and petroleum. 3,500 per ton is the new rate versus the 4,400 per ton. It also marginally increased export duty on diesel to ₹1 per litre from ½ rupee per litre, while keeping both petrol and aviation turbine fuel exempted from export levy. The new rate will be effective 21st of March, which is today. And on the 4th of March, the government had marginally hiked windfall tax on locally produced crude oil to 4,400 per ton from 4,350 per ton. However, it reduced the export duty on diesel, which was slashed to ½ rupee per litre, and scrapped the export duty for ATF altogether.
All right, and Sterling and Wilson Renewable Energy has emerged as a successful bidder for an NTPC project worth 2,100 crore. Somit, my colleague, is here to give us all the details of the order win. Over to you, Somit.
Another big order win for Sterling and Wilson from NTPC. This time it's around 2,100 crore order, and this includes 3 years of operation and maintenance also. Now the project is expected to be complete over the next 18 months since the deal has been signed. Now earlier also the company had won a 2,200 crore order from NTPC in October, so this is the second big order. Now on the back of this recent order win, if you see, Sterling and Wilson's order book is expected to increase by around 66% to close to 4,500 crore rupees. Now apart from this order, recently they had also bagged around 300 megawatt of order worth around around 360 crore rupees. Now, these domestic orders that the company has been winning are expected to yield higher margins for the company as they are pure play EPC contracts as against the turnkey projects that the company gets from the overseas businesses. Now, the risk for these domestic projects are also lower because the company is not expected to procure modules also because there is a shortage in the market. So that risk also goes away for Sterling and Wilson. Now, beside this, the company is also on track to bag the Nigerian order. The MOU has been signed for the order worth around 1.5 billion US dollars, and this shall significantly increase the company's order book once the final deal is signed. And the company is still figuring out the financing of this deal, and once that is done, the final deal will be signed by the company. Now, the company also has a potential to win orders in the range of around 3,000 to 10,000 crore rupees from its parent company, that is Reliance. And apart from these orders, the Sterling has also bid for projects worth 21.6 gigawatt across geographies for FY24. Now, 56% of this are domestic orders, and historically we have seen that the company has a hit rate of around 25 to 30% on domestic orders and around 10 to 15% when it comes to the international orders. Now, brokerages are also very bullish on the stock, and they're saying that they are expecting a meaningful earnings turnaround from FY24 as these new large profitable orders get executed. And on the track of these new order wins, are also saying that the company is on track to achieve its guidance of around 8,000 order win per annum as against the 4,000 crore what they have done so far. And they're also saying that because of this new large and profitable orders, the company will surely deleverage its balance sheet meaningfully in the next financial year. Now, the management had also said earlier that they're looking to meaningfully deleverage their balance sheet by the end of next financial year, that is FY24.
Thanks so much for all those details. Keep an eye out on Sterling and Wilson. We'll be buzzing in trade today lightly. Quickly moving on, ET Now's managing editor spoke to Ravi Dharamshi, CIO of ValueQuest Investment Advisors. What are his views on the India and Indian markets? Why does he believe that India is at an inflection point? Let's listen in.
I strongly do believe that India is at an inflection point. We were calling our conference a VQ Inflection Day, but that is about inflection is in India. Inflection was for us also personally. Of course, we have grown a lot in the last 2-3 years. But from India's point of view, see, India is going from being a $3 trillion economy to 5 and 10 eventually over the next 6, 7, 8 years. And when that is going to happen, it is going to kick in a big consumption J curve. The discretionary spends are going to go through the roof. Surely we are facing some shorter term headwinds. So I'm not going to talk about 1-2 quarter view over here. We are talking about, see, India has managed COVID well. And this management is not only limited to the health crisis. I'm talking about the fiscal crisis or humanitarian crisis. All was managed well. Because of our better fiscal management during the COVID period, is that we are not in the kind of trouble that the global, most of the developed economies are. They've overstimulated the economy and they are having inflation that they haven't seen in few generations. While we have always dealt with slightly higher inflation, and for us it is pretty much par for the course. So if you, it is reflecting in the market performance as well. For us it has been a mild correction or consolidation over the last 15-16 months. It's not been like a crash. If you talk about the crypto or the tech or the bond market worldwide, there has been a lot of wealth erosion. India has managed to retain its wealth. The moment this crisis abates, I don't know when that will happen, India should actually start growing again. A lot of the FII selling today, I believe, is a result of pain elsewhere. It is not, the financial sector in India is one of the cleanest. They are witnessing a very high growth, and that growth is only going to pick up from here. So I strongly believe from all point of view, from politics, geopolitics, the management of economy, everything, India is positioned to take off from here.
And well, that was Ravi Dharamshi speaking to our managing editor. And now we have Sharad in the studio. He will be talking to us about the GE Shipping Investor Day meet that happened. Sharad, take us through the details of what happened in the meet.
Well, yes, it's not a widely tracked stock, but then there was an important management meet, and let's actually focus on it. Especially the commentary came on the offshore division. Now, looking at it, it's expected to break even by FY25, and do remember that the entire fleet's entire repricing will happen of the total assets going ahead. And this recovery, however, if you see, is unlikely to be derailed due to the recent oil price corrections. Now, apart from this commentary coming in on the new order activity, and that has actually increased over the last 2 months of this year, and industry is still, however, expecting a negative global fleet growth, at least for the tankers in FY24. Apart from this, the company has stated that they are not keen at all to selling their ships, even that the asset prices are at the multi-year high levels. Apart from this, what lies ahead is something which we dug, and over here they're expecting they're on track to have almost 3,500 to 4,000 crore of free cash flow generation. And do remember that the tanker rates are already expected to be strong, but if you talk about the dry bulk rates, that itself is expected to improve in the second half of FY24. Now, looking at the stock itself, it's down 19% from the December highs itself, and in terms of the brokerage stakes, Ambit Capital has a buy rating with a target price of 800 rupees per share, while B&K Securities also has a buy rating with a target price of 933 rupees per share.
Well, thanks so much for that, Sharad. We'll quickly move on. Top market veterans are trying to make sense of the global chaos. We have Peter Maguire, Punita Kumar Sinha, Davina Mehra and Rahul Bhasin, all of who believe the Indian market remains fairly resilient despite global shocks. While in the turmoil, banks is a worrying sector. There is opportunity across sectors in India. So listen to what they have to say.
The psychology of the market too greatly for, as far as the Fed was concerned. So that might be a thought there. And what that does naturally to the US dollar, and where does, the likes of indexes, what happens to Wall Street and the overall picture globally with equity markets. And naturally, you roll that across to bond yields, currencies, commodities. Look at copper yesterday, down nearly 4%. Gold still sitting at that 1915 sort of handle. I'm looking on the screen now, about 1915. So, yeah, there's big moves out there, big volatile moves.
Ultimately, once this plays out, maybe the impact on the markets may well be positive, because what the markets now are banking on is that because of all these issues, Fed will back off somewhat on the rate hiking. In fact, being like kind of zero weight on banks, we actually went to market weight on banks about 9 months ago, and that has done well for us. So that we still continue. Capital goods, we continue to be overweight, but of course, that story has been playing out for us for a year and a half. So, while it still looks like an outperformed sector.
The transition from the IC engine to the EV engine, you're on a structural growth, but AI is another area which is, you can see around the world that's going to significantly change things. Cybersecurity is another area where you get tremendous amount of growth, right? Engineering services, the world is moving to more and more defense expenditure. So I think you'll see a lot of these kinds of changes taking place.
As an investor, the first thing which we have to remember is that what are the possibilities of SVB kind of situation in India? One, our interest rates haven't risen as much as US Fed had to raise. So to that extent, mark-to-market losses on our treasury portfolio will be limited. Number two, India has implemented Basel III norms for banking system. In US, it has been implemented on a piecemeal basis. Under Basel III norms, you have to maintain liquidity coverage ratio, which apparently wasn't maintained in SVB cases. So to that extent, we are better off.
So if markets collapse further in terms of stock prices, particularly of the banking sector, and the valuations will become a little bit more attractive, and then markets will start looking ahead, potentially if the Fed rate hikes stall. So there could be, while it's going to be a very volatile environment, there will be trading opportunities, I think, in this environment to make money. So the valuations of the banking sector and some of the other sectors where there's been price dislocation actually becomes a little bit more appealing, and emerging markets as an asset class obviously look even more attractive as compared to the US.
Right, those were the market veterans making sense of the global chaos. Moving on, a tire maker Seat has announced the appointment of Arnab Banerjee as the new managing director and CEO. This comes after Anant Goenka resigned from the company. Arnab Banerjee will serve the company for 2 years. And a little something for the coffee lovers. Starbucks gets a new CEO of Indian origin. The Seattle-based coffee giant confirmed that Lakshman Narasimhan has assumed the role of CEO and has joined the board of directors. Narasimhan succeeds longtime Starbucks leader Howard Schultz, who came out of retirement last spring to serve as interim CEO while the company searched for a new chief.
Well, and quickly moving on, the United States strongly condemned the attack on the Indian consulate by Khalistani elements, calling it absolutely unacceptable. To give some context here to our viewers, earlier this week, Khalistan supporters had attacked the Indian consulate in San Francisco in protest over the police crackdown on Varis Punjab, their chief, Amritpal Singh. Let's quickly move on. The city of Mumbai and Delhi are witnessing unseasonal rainfall, which comes as a temporary respite for rising temperatures. Meanwhile, the capital records the highest rainfall in 3 years in the month of March.
And all right, with that, it's time for us to wind on this one. Don't go anywhere. There's lots more action coming up on the market. Thank you so much for tuning in.